U.S. stocks rally ahead of key macro data and the Fed policy this week. The S&P 500 gains for the fourth straight week, the Nasdaq for its seventh, as the street bets that the Fed will finally pause on rate hikes at this week's meet. Stocks in the Asia-Pacific opened mixed this morning, while the SGX Nifty is signaling a higher start for the Indian market. Oil prices correct over 1% to under $75 a barrel, declined for the second straight week ahead of the Fed meet, and as disappointing data from China raises concerns over global demand for oil. Moody's sees India's GDP growing at 6 to 6.3% in the June quarter, lower than the 8% projected by the RBI last week. The agency also flags risk of fiscal slippage and weaker than expected government revenue. A Reuters poll sees India's CPI inflation for May coming in at a 20-month low of 4.42%, close to the RBI's 4% aim, as the rise in food prices eases. Good morning in the Mumbai News Center. I'm Sonal Bhutra. You're watching Power Breakfast. A fresh new week. It's a Monday morning and it is going to be a very, very busy week, especially when it comes to the policy meets across the globe. So let's take a look at what's happening in the global markets. Asian markets, they are largely mixed despite the strong handover that we got from the Wall Street. So we have the Taiwanese index, which is higher in trade right now, but the Hang Seng is lower by 44 points. Nikkei is surging in trade today, so 0.7% higher on that one, but the Shanghai markets and Kospi too are lower in trade. Now remember, the US Federal Committee will meet on 13th and 14th of June. The European Central Bank will meet on Thursday, and we have the Bank of Japan's meeting, which will conclude on Friday. So a slew of central bank meetings are scheduled this week, and that is something which will decide the mood of global markets this week. The SGX Nifty that'll come up for you on the screen is indicating that the start for our own markets, well, that could be in the green, a dark green, that is 75 points higher on the SGX Nifty. We'll have to see whether that happens or not, because in Friday's trading session, we did see a fall from the highs. Let's talk about the U.S. markets now. Wall Street ended Friday's trading session higher, with the Dow Jones gaining over 40 points, the S&P up 4 points, and the Nasdaq Composite closing with a 20-point gain. The S&P 500 hit its highest level in over 9 months. The index capped another winning week, closing 0.4% higher. This was the index's fourth straight winning week. The Nasdaq was up around 0.14%, posting its seventh straight winning week. Meanwhile, the Dow advanced 0.34%. CNBC's Bertha Coombs gets us a wrap of all the action on Wall Street.
The Dow tacking on 43 points, the S&P adding 4, while the Nasdaq was up 20 points, touching its highest level since August and notching a 4-week winning streak. Tesla matching its longest ever winning streak on the heels of an EV charging deal with GM. The stock gaining for the 11th straight session, jumping nearly 4% today. The last time the stock was in the green for so long was back in January 2021. Tesla's shares are now nearly doubled since the start of the year, but they're only slightly higher from where it stood a year ago in June. And an FDA advisory panel has voted unanimously to recommend Biogen and ESI's Alzheimer's drug Leqembi for full approval based on late-stage trial data. The vote could pave the way for the drug, which costs more than $26,000 per year, to be covered by Medicare, the health insurance for seniors here in the U.S. Leqembi could receive full FDA approval this July. That's what's happening here in the U.S. Back to you in Mumbai.
Okay, that's the U.S. market action. But ahead of that crucial Fed meet, let's get you some key voices on the rate trajectory. Listening to what former Fed Reserve Vice Chairman Roger Ferguson, Columbia University Professor Frederick Mishkin, and Wharton School Professor Jeremy Siegel had to say on the expectations from the June policy.
So I'm not as convinced as the market that a pause is baked in. You just said the market is pricing in an 80% expectation of a pause. I actually think it's a 50-50, very, very close call. But most importantly, the big picture is even if they do pause, as we've seen with other central banks, that does not mean that they're over. And so the market should, I think, brace itself for a Fed that is going to continue to be hiking, even if this one happens to be a pause. And I think the pause here is really a closer call than the market currently expects. So labor markets continue to be tight. Approximately 1.7 to 1.8 jobs for every unemployed person, far higher than the norm. Wage rates continue to go up. There are a couple of things that might be giving some hope for a probability of a soft landing. One is that consumers here continue to be relatively robust. There is what's called a wealth effect, so equity markets actually have done pretty well in the first half of the year. As I already indicated, wage growth still expected to be relatively strong. So those are some of the things that are positive for us. I think the things that might lean towards more of a slowdown and maybe a short and shallow recession, basically as the Fed has more work to do, and with inflation being sticky, possibly having to raise rates and actually force us into this short and shallow recession that others have been predicting. So I am still in the camp that a recession is a real possibility.
I think that we're in a situation where inflation numbers are still high, are very slow to come down towards the 2% target, particularly in the underlying inflation, which is a number that is much more reliable in telling us about what future path inflation will be. The economy and labor markets are still quite strong. There is some weakening, but we've got a long way to go before we contain inflationary pressures, and therefore, I think that the Fed is going to have to raise rates, and better off doing it now to show their strong commitment to keeping inflation under control. Particularly important because they did blow it earlier on when they were too slow to start raising rates, but luckily got to the stick and really started raising rates quickly.
July is still pricing in 25 basis points. I think that's going to be too high. Interestingly enough, you know what the most important data next week might be? It might be Thursday's initial claims report, of course,
Yes.
which comes after the Fed meeting. That was quite a jump last week, and I don't want to make too much because that's a volatile data point. But I always have taught and stated that the initial claims is a very sensitive early indicator. We had kind of a false move a month ago when we found out there were fraudulent claims from Massachusetts. It went up, and then it went back down. They claimed there was no fraudulent claims in that last report, but we'll see if it's repeated as far as that's concerned.
Okay, with that, let's move on to the final update on our global market wrap this morning. European markets ended Friday's trading session lower, with the French CAC down 9 points, the German DAX slipping 40 points, and the British FTSE closing 37 points lower. Citing an internal memo, Bloomberg reported that Credit Suisse's CEO has indicated that the bank's emergency takeover by UBS will be completed today. Remember, on Friday, even the CEO of UBS had hinted that the takeover of Credit Suisse will conclude today. The earliest expected date and the most important cue this week from the region, the European Central Bank is widely expected to raise rates by 25 basis points this week, despite the Eurozone entering a technical recession. Commentary from ECB President Lagarde on inflation and the rate trajectory will be closely watched. And of course, we'll keep getting you updates on that one. For now, we'll slip into a break. When we return, we'll tell you how these overnight cues will impact our own market. Stay tuned for that. Welcome back. You're still tuned into Power Breakfast on CNBC TV 18. Well, we just spoke about important global cues and what happened in global markets over the weekend on Friday as well. Let's get in our research team now to tell us what the trade setup looks like, the stocks that are likely to be in the news and the action from the F&O space as well. What could the impact of the global movement be? Very good morning to all of you guys. Ekta, first up, let me come across to you. What is the market setup looking like today?
Hi, thanks for that. Well, yes, on Friday, the markets closed with minor cuts following what was a range-bound session. The sensex fell over 200 odd points. The Nifty was lower as well. FII's net sold around 308 odd crores in Friday's trading session, and DII's net bought as well. US markets moved slightly higher on Friday. We have Asia, which is mixed right now. SGX, which is indicating a bit of a higher start. Brent crude, which was down for the second consecutive week, so just about below $75 per barrel, which is a positive. Now, in terms of the cues, despite what happened in terms of Friday's trading session and last week, it is a big week in terms of macro data. We have the India CPI data for the month of June, which is out today, and it is expected to be a sub 5% for the month of for the month of May, and that is expected to be at a multi-month low. So that is probably going to be a sub 5% figure. We have the US CPI data for the month of May, which will be out tomorrow and will be a precursor to the FOMC meet outcome, which is taking place this week as well. Remember, it is expected to be a hawkish pause, possibly a pause, by the Fed after multiple rate hikes which they've undertaken. Remember that they've been hiking rates for the first since early of 2022. There will also be the ECB meet, which is taking place on the 15th of June. So that is expected to be something that we should watch out for, considering that the ECB is expected to hike rates by around 25 basis points. So a lot on the macro front. Larger trend is that India last week recorded minor gains. We were up for the third straight week. We have a lot of stocks at fresh 52-week highs, such as Axis, Britannia, IndusInd Bank, IOC, Just Dial, Max Health, a lot from the broader as well as from the frontline space. And even for the US markets, they notched their fourth straight positive week. So the larger trend seems to be definitely intact for our markets.
Okay, all right. Thank you for all those cues, Ekta. Let's talk about some stocks in focus today. Vivek is joining us with that list. Vivek.
Well, good morning. Quite a few stocks on the radar on the back of multiple news flow that's come in, post Friday. First on our list, Go Faction. Now, what we understand from our sources is that there's going to be a very large block deal. Almost 10.18% of the equity is likely to change hands. We understand that the seller is going to be Sequoia Capital, and the floor price for this particular block deal, is at a 5% discount to Friday's closing at 1,135 rupees a share. Total size of the blocks would be roughly around 624 crore at that particular rate. The other one on our radar is Titagarh Rail Systems, a significant fundraise being done by the company, fundraise via a preferential issue, and the company is looking to raise almost 288 crore from Small Cap World Fund at 380 rupees a share. Watch out for TVS Motors as well. Two separate news flow coming in there. The company's Singapore arm has gone ahead and acquired an additional 25% stake in Swiss E-Mobility Group, and after that, Swiss E-Mobility Group will become a fully owned subsidiary of the company. Separately, the company has also gone ahead and done a fundraise in its NBFC arm, that is TVS Credit. The company is going to issue almost 1.52 compulsory convertible preference shares to PI Opportunities Fund, and this is for a total investment of around 480 crore. Watch out for Cochin Shipyard. Company is declared as the lowest bidder by the Indian Navy for upgrade of an Indian naval ship. The estimated contract value is around 300 crore, estimated duration of 2 years. Lastly, Info Edge, news flow coming in where the company has gone ahead and sold its entire shareholding in a company known as Happily Unmarried Marketing Private Limited. This sale has been done to VLCC Healthcare via both a mix of share as well as a share swap. And the cash consideration for this particular deal is at close to 61 crore rupees.
Okay, those are a lot of stocks, Vivek. Thank you so much for joining us with that list. Let's talk about the F&O space now. Nigel is joining in with all the cues from the F&O markets. Hey, Nigel.
Well, morning, Sonal. The markets have been seeing some bit of pressure at high levels. We're waiting for the fresh all-time highs, but it seems there are a couple of hurdles as we get there, which is par for the course, I would say. In terms of Friday's trading session, there was some unwinding of long positions, both on the Nifty as well as the Nifty Bank. And if you're looking at the FI numbers that came in the F&O market, well, that perfectly ties in. They unwound closer on 7 57,000 contracts. The short positioning now moves to around 54%. You'd like that number to move up a little bit, getting into a big event. That's the Fed meet later this week. Then, in fact, if they deliver what is expected, maybe you'll see a bit of a short covering rally. In terms of the index options, well, they bought more calls than puts. But what's telling you at higher levels, we're likely to see some bit of resistance is the way they're writing calls. And even in Friday's trading session, they wrote more than 2.4 lakh calls. That's in the ratio of nearly around 5:1. And what were they writing? 18,600, 18,700 call, both of them very active. Between them, they added close to around a crore shares odd. So there was writing at both those two strikes. And on the downside, in case things go wrong, in case you get a shocker from the Fed, maybe you get a couple of negatives that come in there, then there appears there is some lower level put buying, but that's just a protection buying. The PCR we highlighted a few days ago, it was hovering around 1.35. That's come down to around 0.8, which is good news from a bullish perspective. I think we're fine, as long as we hold on to the 20 DMA, so that becomes your first level of support. Resistance, though, comes in at higher levels. The SGX 50 suggesting a green start. I don't think you go ahead and jump in and buy the start. You wait for a bit of an intraday dip, and you look to get in, and your stop loss will be the 20 DMA. So keep an eye out on that 75 points bump up. I don't think you chase that. But if you get an intraday dip, maybe you look to get in and keep your stop loss as well, and hope that, in fact, you see that move towards all-time highs. Back to you.
Okay, all right, Nigel, Vivek and Ekta, thank you so much for joining us and prepping us up for this trading day ahead. Moving on to some important macro cues now. Rating agency Moody's says the Indian economy is expected to clock a growth of 6 to 6.3% in the June quarter. That is below the RBI forecast of 8% growth for the first quarter of FY24. However, the rating agency also flagged risks of fiscal slippages arising from weaker than expected government revenues in the current fiscal. Remember, the IIP numbers for the month of April and CPI numbers for the month of May are expected later today. A Reuters poll sees CPI inflation for May coming in at a 20-month low of 4.42% as the rise in food prices cools this time. Let's do one thing, slip into a short break, and up next we'll get you all the cues from the commodities market. Stay tuned for that. Welcome back. You're watching Power Breakfast here on CNBC TV 18. Well, we spoke about a whole host of things, the global markets, our own markets, the expected CPI data today. It's time to talk commodities now. Manisha Gupta is joining us with all the update as always. Hey, Manisha, good morning.
Morning, Sonal. Thank you for that. Well, I'm looking at the precious metals because we've seen the best weekly gain in 1.5 months for gold and the best silver gain in a week in 2.5 months. So it has been going good. The dollar index trading below 104 clearly has been supportive. And the markets now will watch out for the very data-heavy week going forward. You have the US FOMC on 13-14, ECB on 15th, and Bank of Japan meeting on 16th. So every day starting Wednesday, you have a big monetary policy meeting coming in, and the gold and the forex markets will continue to take action from that. In the meanwhile, you also are looking at the crude oil prices declining further. We've seen a second week of decline already, and this week has started below $70 a barrel for the WTI crude prices. It has to do with the disappointing China data. The May factory gate prices fell at the fastest pace in 7 years. There also has been rise in U.S. fuel stocks, and the prices have continued to stay below $80 a barrel despite the Saudi cuts. And on the charts, they are looking weak further from here.
Okay, all right. Thank you so much, Manisha, for that. So you spoke about crude oil prices. Let's get you some important commentary on the oil market then. At the Arab-China Business Conference underway in Riyadh, Saudi Arabia's Energy Minister Abdul Aziz bin Salman justified the OPEC Plus decision to extend cuts into 2024, saying the group was working with a market that was giving mixed signals. Here are some excerpts of that conversation.
Working against something called uncertainties and sentiments. And I believe that within this month, hopefully the month after, as I don't want to bet and gamble, but I think the physical market is telling us something. I think the future market is telling us something else. It's a matter of being in a state of readiness. That's why, we keep taking these precautionary measures. It's part and parcel of what we call it proactive and preemptive. To understand OPEC Plus as it is today, it's all about being proactive, preemptive, and precautionary.
Okay, that's an important commentary coming in on oil prices. Of course, we'll keep getting you excerpts of that conversation. On that note, let's get you some weather updates now. The Indian Meteorological Department has issued an alert for Biparjoy cyclone for Saurashtra and Kutch coast in Gujarat. However, it does not expect the cyclonic storm to hit the Gujarat coast. In anticipation of the heavy rainfalls, the Gujarat government has deployed NDRF and SDRF teams in coastal areas to set up shelters. The Weather Bureau also announced the arrival of monsoon in Maharashtra yesterday afternoon, with rains lashing some coastal areas of the state. It forecast heavy rainfall for the next 48 hours as the monsoon now progresses towards Telangana and Chhattisgarh. Okay, now let's move on to get you some updates on the situation in Manipur. After a month of unrest in the state, the centre has announced a peace committee chaired by the governor of Manipur. The committee comprises of 51 members and includes those from the two main warring groups, the Meitei and Kuki communities. However, several Kuki members have objected to the committee as they were appointed without consent. Meanwhile, the government of Manipur has also issued an announcement to suspend internet and mobile services in the state till the 15th of June. This, they say, is a bit to curb the spread of rumours and prevent the transmission of inflammatory material around the state. Okay, we'll keep getting you updates on this one. It's an important national developing story. But with that, we'll take your leave on this edition of Power Breakfast with the news that the SGX Nifty is indicating a higher start for the Indian market. Stay tuned. Bazaar Morning Call comes up next.